So my journey on the stock exchange started off in 1998 when I was in grade 6. It's actually passion driven. Whenever I would see the shares on the TV, I would always want to understand, what are these numbers? This is as early as grade 6. What are these numbers? What are they doing? And fortunately, in our family, one uncle of mine who's actually on this Zoom meeting, called Emmanuel Kuda Nemaungwe, Lamek, had just returned from France, and he's the one who brought the stock markets to the family. So we now had somebody who could lead us into this journey. Okay, so I had that passion, that burning desire to know, what are shares, what can they do for me? And then we had a relative in the family who actually came back from France after completing his degree, who was leading us in terms of procurement of shares. So from there, by the time I was in Form 4, there was 2003. That's where I got money from my father to buy my first set of shares. And I remember there were 500 Econet shares. So generally, the way I invest on the market comes from the character from birth. You find that my father's side of the family is a military wing. Then my mother's side of a family are lawyers and humanitarian wing. So you've got a creation coming out of the military and the humanitarian area. So I'm a mixture of that. When you speak of the humanitarian side of life, I understand you. When you speak of the military strategies in order to hit, I understand. So I'm literally a military man in civilian clothing. So I then pushed. In 2004, that's when I got my first shares, 500 Econet shares. And in terms of commercial trading, which has attracted all this attention, usually on the Twitter handle, it started off in 2014, 2015, when I met Patson Ngwenya, who's currently the acting managing director of Tonga Hallet in Mozambique. We would discuss on a daily basis, we would share ideas, and up to now, we do that. So with Patson, we managed to crack the market. We managed to invest and think big and have strategies which most people do not have. You would find that every time we would put an order via brokers, you would see the whole market following. This is a result of those strategies. So that's basically the journey which brought me to the stock market. In terms of achievement, I've achieved quite a lot on the Zimbabwe Stock Exchange, especially even on the Johannesburg Stock Exchange and the Malawi Stock Exchange. So I think the best achievement I've done is to make around $18,000 in a space of 3 days as a profit. Well, so the best monetary value I've made was $18,000 in 3 days in terms of profit. Then in terms of the long run of it, in terms of achievement, at the age of 30, I bought my property in Mount Pleasant Heights. We built it in 45 days, and this is the place I'm currently staying. Then the other achievement which is there is actually the huge following when it comes to speaking. At times, I hardly speak about the market because once you speak, the market reacts. So you really need to watch what you're saying. Like if I start talking about Bindure Nickel Corporation right now at this particular juncture, you find that on Monday, a lot of brokers will start receiving these particular inquiries. So that's basically my journey on the market and the achievements which I've made on the market. It really comes from the family. My father's side of the family, my mother's side of the family, and also that exposure. Thank you.
But maybe the first question that I would want to ask you is to say, how do you pick your companies? What is it that you look at when you pick your companies?
Okay, in terms of picking companies, how I do it is very simple. Firstly, the conventional methods or methods which they teach at school. Then there are other methods which you then craft and implement practically. So how I pick shares is very simple. Firstly, I look at the technical analysis part of life. Technical analysis, we're simply looking at price action when it comes to Zimbabwe and South Africa, the JSE and the ZSE. So if Delta, let me give a practical example. Delta in 2008 was 15 US cents equivalent, okay? So that's the lowest price I've seen Delta. Then fast forward, it then reached around $1.50 during the peak of the GNU. Then post GNU, it was trading. Then just before the market, just after the market closed, remember the market was suspended for a month or so, Delta then relisted. But then when Delta relisted after the market was closed, it listed at around $17 Zimbabwean dollars, which translates to almost 14 US cents. So you'll find that it was 15 cents, now it's at 14 cents equivalent. What does that mean? It means it's low. It means it's a buy. So that is price action. So once you buy it at 14 cents, you don't even need to ask anyone. As long as the balance sheet is secure, it's intact, you just buy. Then after you buy it at 14 cents. Okay.
Sorry, Courage.
Yeah.
Just hold on. I'm seeing some messages saying that they are not hearing anything, so I want to see what's happening.
Okay, sure. When Delta relisted at 14 cents, it was literally sitting at its lowest price, which is what we call the price flow. Okay? So sitting at its price flow, you don't even need to call anyone or ask anyone. What you simply do is to proceed and buy. Why? Because the golden rule says buy low so that you sell high. So when you see it at 14 cents, immediately strike. Just go and buy. Okay? So that's price action for you. After price action, there is what we call fundamental analysis. In Zimbabwe, the stock market is not so complicated. So when it comes to buying, just look at price action for technical analysis. Just price action. The weighted average and all those other things, no, not now. Just price action. So after that, we go to fundamental analysis. With fundamental analysis...
Just hold on. Courage.
Yeah.
When you say price action, probably some might not know what you're talking about. When you say price action, what exactly are you talking about?
Okay. So if we find, okay, for example, if bread is going for $1, a loaf of bread, it goes for $1. It means that's its normal price, huh? If the price of bread is going for $1 and tomorrow you find it at 50 cents, okay, for whatever reason, then 3 days later you find it at 75 cents. When it goes back to 50 cents, it means that's the flow. The flow, literally your flow, the price cannot go below that price. So that is what is called the price flow. Okay? So the price flow of Delta in that case was 14 cents, 15 cents. So you jump in, you immediately buy. When it then reaches $1.50, it has reached its peak. It's time to sell. So that is basically price action. Price action, I once posted on Twitter. You're looking at the difference between the highest price and the lowest price. And the difference between those two is called a range. So if the price is near the highest, it's time to sell. If the price is near the lowest, it's time to buy. So it's the range. So the price moves in a range between the highest and the lowest price. So that is basically price action. After price action, we have to go to fundamental analysis. And fundamental analysis, what you need to look at are two things. The first one is called the PE ratio. Then the second one is called the net book value, the price to book value, the PB ratio. So the PE ratio is simply a mathematical calculation which equates the price to the earnings of that particular company. To non-accountants, earnings are the profits of that company. We're saying the price you're going to pay. Okay, so if the PE ratio of a company is 2, or the PE ratio of a company, it's 2, it means for you to make $1, you need to put $2 into that company. If the PE ratio of a company is 300, it means for you to make $1, you need to put $300. So the higher the PE ratio, the unattractive the stock is. And the lower the PE ratio, the more attractive the stock is, because it has a huge potential for growth. Are we together? Yeah, so the PE ratio is a mathematical calculation. If you find the PE ratio below 10, that usually shows you that the company has capacity for growth. Go for it. You can also compare the PE ratio to the peers. If we're comparing the PE ratio, for example, of Net1, we can compare it to Econet, we can compare it to Vodacom, even across the border. So that's the reason why you hear us sometimes saying, hey, Econet is undervalued, because we're looking at MTN, we're looking at Vodacom and pegging it to our own. We then match the revenues, we then match the earnings to come up with a value. So that's fundamental analysis. You're looking at the price to earnings ratio. So the lower the PE, the more attractive the share is. The higher the PE, the less attractive the share is. Then from there, we are going to the PB ratio, the price to book ratio. What the price to book ratio means is if the cost of producing this phone I'm holding here is $100, the physical cost of producing this phone is $100. The material here, the screen, the battery, the LCD, everything costs $100. That's the book value of the phone. That is the actual worth of the phone. But then, if you then go to the market, it doesn't mean the phone is being sold at its actual value. So the book value is always different from the price. So the price at the market is the P, then the book value is the B. So if you divide P by B, you get what is called the PB ratio. So the PB ratio should always be equal to 1. If the PB ratio is not equal to 1, it means the counter is either overvalued or undervalued. If the PB ratio is below 1, the counter is undervalued. If the PB ratio is above 1, the counter is overvalued. So if you see the PB ratio below 1, and you see the technical analysis telling you that it's at the lowest ever, what do? Immediately, you strike, you buy. So these are the two methods which I can share with you for free on this platform. the others would need to talk on a separate meeting. But anyway, so that's technical and fundamental analysis. The psyche of the market, in the law, at law, they say you have the right to be presumed innocent till proven guilty. That's law. At the market, there is the psyche of the market. How does the market think? How does the market react? So you find that every time you buy a share, you buy it today. Before you buy, you do your calculations. You say, this share is cheap. You buy. Immediately after buying, you know what happens? That share will fall. Then you'll start thinking, did I make a wrong move? In psychology, they call it cognitive dissonance. Cognitive dissonance is a feeling you have after buying, purchasing an asset. You then remain with a feeling. Those years what watenga and uchurubuda pa supermarket, hey, up. That's cognitive dissonance. So cognitive dissonance is a feeling you have after making a purchase. Either you're happy or you're sad as a result of the purchase you've made. That's exactly what happens on the stock market. So to manage that, you need to do what is called emotional management. If you listen to that song, The Gambler, he talks about, then I drank down the last swallow of whiskey, then his face then lit up. So why did the gambler drink that last glass of whiskey? Why didn't he ask for water? Because when you get on the market, you need to be drunk somehow. Because you're looking at a field where you invest $1 million, then tomorrow it wakes up as $50,000. So you need to be drunk somehow, and you need to manage those emotions. So the psyche of the market. I'll give you a practical example of the psyche of the market, something which just happened recently. When the market was shut by the government for them to do their investigation regarding money laundering and illicit trades some 3-4 months ago, what happened on the market is the market was shut, and you've got investors there who just want out. So people panic because it's been shut. So the day the market was reopened, everything traded lower. Everything traded lower. Delta, my favorite, before the market shut was around 29 bond. The moment the market opened, it fell to almost 17, 16 bond. What made it fall? It's not the fundamentals. It's nothing to do with the fundamentals, but it's panic, the emotions. So when people panic, they sell. So you find that the stock exchange falls faster than it rises. So once the market starts falling, people start selling off, which is the biggest mistake. When the market falls, you're not supposed to sell off, you're supposed to buy in. Why do I say so? When you then buy in, you get more in terms of quantity. If you're buying a share at $1 each, with $1,000, you get 1,000 shares. If that share goes down to 50 cents each, if you use the same amount, $1,000, you're going to get $2,000, which 2,000 shares, which is actually a double in terms of quantity. And on the stock market, you make money by number one, capital gains. Capital gains means you bought a share at $5, now it's $10. You've made 100%. Number two, you make money by quantity, which Ivan Fisher describes very well. You need to Google these things. So quantity, I'm saying, with $1,000, I was going to get 1,000 shares. But now with $1,000, I'm going to get 2,000 shares. You get it? So that's an increase in value. Yes, the value hasn't increased, but that's an increase in quantity. Okay, that's the second method. The third method you make money is through rights issue and bonus issues. And then the fourth method is through unbundling, share splits, and all those other things. So the psyche of the market, you need to understand the psyche of the market. When coronavirus struck, there was in December of last year, you'll find Sasol dropped from 300 Rand to as low as 20 Rand. What happened? People were panicking, selling, thinking, hey, it's time the world is coming to an end because we've got this virus which is untamable. But then the moment it hit 20 Rand, we started buying and buying and buying. Now, as of yesterday, it's back to 200 Rand. That's 10 times fold in a space of what? Of 8-9 months. So that's psych management. So you need to watch your psychology. You need to watch your psych. When shares start falling, do not sell. Buy more. As long as the balance sheet is solid, as long as the financials are solid, buy in. Do not sell. Do not be a coward. On the market, we don't want coward, which then brings me to the three types of investors. They are bulls, they are bears, and they are pigs. Bulls buy low so that they sell high. Pigs sell high so that they buy low. Pigs hear that the market is performing, they come in, we slaughter them, and they are never to be seen again. So you need to manage the psyche of the market. Before you jump in onto that market, look for courage. Ask him. Because you will lose the money. And we'll take it gladly. Okay, the market is a zero-sum game.
Can you talk about the pigs again, courage?
The pigs just tune in to Power FM. They hear Kudzai Sharara saying the stock market is paying. Then they take their savings and their lifetime savings. They even borrow. They just come and randomly buy. You know what then happens? We'll slaughter them. That's what happens with the pigs. Okay? Of the market. We then need to look at what do you call it? Future business plans of the particular company. So to get a clear understanding of future business prospects of a company, look at Zimbabwe, for example. We've got 96,000 kilometers of roads to be resurfaced. We haven't even talked of jewelization of the roads. We haven't even talked of, the flyovers, these spaghetti roads and everything. We're simply talking of the opportunity that's there. So you tell me, there is a company out there, there are companies actually which are out there responsible for fixing these roads. And their values right now are cheap. Why? Because roads are not being fixed as a result of the government not having enough capacity to deal with the roads at this very moment. So what do? You look at the balance sheet of that company. As long as it's solid, you take your money, you jump in, and you relax. That's why you see people jumping in like Masimba, the former Marion Roberts Masimba Corporation. It actually moved eightfold over a period of 3 months. Just these past 3 months, it moved eightfold. How so? People will see the value. It's not really about what is happening now, but then the future business prospect. These are the guys who are going to be fixing the roads. They'll get a slice of the cake. Wherever you go, Masvingo Road, you'll find, okay, Marion Roberts is there. You'll find Bitman is there. So you need a slice of that cake. You need to be involved with these guys. You need part of the shares of those companies. So future business prospects simply makes me go out there at Copacabana, and I'm seeing all these ex-Jap cars because, nobody really affords the brand new cars. So there are ex-Jap cars everywhere. But then where do they buy their spare parts? They buy at Transerv. Who owns Transerv? It's Axia. So Axia's revenue base is going to be large. So you then look at Axia, well, technically, fundamentally, but then future business prospect is already telling you that Axia has a grip on the market, and its demand is always there. You go to Transif, there is always a queue. It's supposed to be an indicator. It's a good company to buy. It's liquid. The more liquid you are, the better you are. But then after realizing that they've got that access to revenue, then analyze the books, analyze the management. That's the other issue after the future business prospects. Who's leading this company? Who is leading this company? You know, they're perennial failures. People where if you hear that he touches anything, it goes to the trash bin. So who is leading this particular company? So you find that there is Joe Mtizwa, for example, the guy who was a Delta. The moment he joined Star Africa, just the news that Joe Mtizwa has joined Star Africa, the share skyrocketed. Not because anything had changed, because there is coming somebody who is bankable in terms of ideas. So who is leading that company? You need to check the management. Who is leading that particular company? Okay? Then, at the end of the day, there is what we call current affairs. You need to look at current affairs. And current affairs, all of you went to school, Zimbabweans are very educated. You're looking at your press, your political, your religious, economic, social, and technological issues which affect the shares before you buy or before you sell, or even before you hold. Okay? So you need to look at the political environment. Okay. Panopisa politics. So we jump. Next, religious environment. You're hearing that COCOM is joining the Middle East. Then you buy into COCOM thinking, we're going to make money because Arabs have money. But then you haven't looked at the religious aspect of it, because those guys are Arabs. They don't take pork. And COCOM is known for pork. So literally you hit a brick wall before you go anywhere. You need to look at the economic environment. This afternoon, Kudzai, somebody was asking you the relation of the stock market to the GDP. Yes, there is actually positive correlation between the GDP and the stock market. Okay? So positive correlation, you find that the market operates 60% of the GDP. If the GDP is 10 billion, you expect your stock exchange to be 6 billion. So if you find your stock exchange at 2 billion, it means it's undervalued. If you find your stock exchange at 14 billion when your GDP is 10 billion, your stock market is overvalued. So you need to look at the GDP and its relation to the market. And the ratio which works is 60%. Okay, so the economic factors, obviously, issues to do with the currency, issues to do with the interest rates. There's an inverse relationship between the stock market and the money market. So if the stock market is performing well, the money market is down. If the money market is performing well, the stock market is down. So you need to look at that. There is an inverse relationship. Isiso. So can a stock market iri up, money market iri down? Can a money market iri up, stock market iri down? So you also need to look at that before investing. Then you need to look at the technological aspect. I think all of you have been reading about Mr. Musk and how he managed to outweigh Jeff Bezos, Bill Gates, and the like. It's now about technology. What product are you buying into? How good are they in terms of tech? The reason why we're having this meeting during this lockdown is because of tech. We've got cameras everywhere. We've got microphones everywhere. It's tech. Even when you're in the field doing farming, if you're doing your traditional farming versus somebody who's applying tech, you will never beat that person. So you need to look at the technological area and before you invest. So that's basically what I look at before investing in a share. And then the last thing, which is very simple and straightforward, is mathematics. You need to look at the mathematics, GCE O level. You'll find that, okay, fine, Sasol was at 300 Rand, okay? So if we say 300 Rand and it went down to 20 Rand, then what is the upward potential? Okay? From 20 Rand to 300 Rand, we're looking at how many times? 15 times. Are we together? So you need to look at mathematics. If a counter drops by 20%, when it increases more than 20%. That's mathematics. So you also need to apply your mathematics in there, then you just hit it from there. So that's basically what I can tell you here for free, how I pick my stocks.
How did you decide to say this one is now ripe for selling?
Okay, so time to sell. Before you invest on the market, you should have what we call an investment strategy. If you're there at the showgrounds, okay, it's a highway which leads you from Harare to Bulawayo. So before you board the bus, before you board the Chova, the Malaicha, you need to know where you're going. Are you going to drop off at Norton? Are you going to drop off at Chegutu, at Gweru, or in Bulawayo? Okay, so that is what is called an investment strategy. You need to peg targets. Okay, so personally, I can get onto a counter and peg 20% as a return on investment. If it hits 20%, I don't care. Reddit is going to say this counter is going to be going up, blah, blah. No. What I care about is I've reached my destination, I'm going. That's the way I do it. So the first one, how to offload. First, you need to set targets. Are you targeting a percentage return? Are you targeting value in terms of money? Once you hit $1 million, just sell, go home and celebrate. That's the first point. The second point, you also need to look at the factors which you looked at the time of buying. Okay, so is the share now at its price ceiling? Yes, it can hit 20% mathematically, but I realize, hey, it hasn't reached its potential. So we look at momentum. Momentum, if a share was $20, tomorrow 22, then the next day 26, then the next day 35, you can't sell it as it's increasing. You need to watch. Where does it reach 35, then 35.50, then 35.75, then 35.80? At that moment, it's consolidating, you need to offload. What does fear mean? If you look into fear, you realize that it's false evidence appearing real. So if you still fear, you're not supposed to be in the market in the first place. So that's the first thing. Then the second thing, you can't harvest everything on the market. Even if you have a farm, you harvest. There are some people who live on the street, and what they do is they come with those masaga. You don't finish everything. You don't sell at the premium. Then you need to be a profit. What you need to do is to set your targets. You can't really sell at the optimum price. Once you set your target, then you're done.
Says on technical analysis on the ZSC, do you use tools such as OBV, average, directional index, moving average, etc.? Do you have any technical analysis tools that you use currently?
Yes, just like I said, the ZSE is different from the international markets. The only tool you can use on the ZSE is price action. Price action, which is your lowest price and your highest price, then the difference between the two is the range where the price bounces in. That's what you just need to look at in terms of technical analysis. Nothing else. Simple as that.
The JSC as a Zimbabwe, I know you also trade on the JSC courage. How does one get trade on the JSC if you're in Zimbabwe?
Well, okay. Next time you have your trip to South Africa, you go to a bank, FNB. You go with your passport. Then you ask to open what they call a non-resident account. Then they will open it within 30 minutes. You get the mobile banking app. You get the login credentials for the internet banking. Then after that, you go to AfriFocus. You go and look for a gentleman called Sam Nganga Jr. He's a Zimbabwean. Well, I like dealing with Zimbabweans in South Africa because they are very efficient. So Sam Nganga Jr. is in Sandton, working for AfriFocus Securities. If you need contacts, I'll post them on my Twitter handle, no problem. Then the second guy is Sebastian. He's currently with Avio. Avio is also a securities exchange broker, and they're based in Sandton as well. So instead of going to South Africa, you go to the beach, you take pictures, there's no problem with that. But before you fly back home or you bus back home, just take 30 minutes in FNB, open a non-resident account, then you have access to a bank account. Then after you have access to a bank account, you can then open the broker, the JSE broker. Then from there, as you're doing your business, You then need to structure a way where you also open ventures in South Africa, where you get your funds credited in those particular accounts. Then you can start trading on the Johannesburg Stock Exchange. The world is now a global village. You can actually live in Zimbabwe and be working in South Africa, earning your money in that account and investing it onto the Johannesburg Stock Exchange. It's not a crime. It's a global village, and it's very possible. As we're doing on Zoom right now, I can actually be working in America. Actually, we actually do trade and invest on the New York Stock Exchange, on the London Stock Exchange, on the Lusaka Stock Exchange, and Malawi Stock Exchange, including Joburg and Zimbabwe. But I'm based here in Harare, Zimbabwe, because I feel comfortable at home. So that's how you open an account to trade internationally.
Does the volume of share traded on trading days say anything about the company? The number of shares that trade on a given day, does it say anything about the company?
Absolutely. The volume of shares traded on a company says a lot about the company. Firstly, in terms of the liquidity, how liquid is that company? Because when you buy a share tomorrow, you're actually buying with the intention of selling at some day in the future. So it has to be liquid. So if the company then trades a lot of shares, which is volume, it's actually good for you, because you can then enter at any time. If I think of buying tomorrow, I buy. Then if I think of selling tomorrow, I sell. But then if the volume is very thin consistently, it means you hardly enter. You can put your trade, you put your bid, and it goes for 3 weeks without them executing. So you might calculate on paper that yes, it's time to buy, which is correct, but you fail to buy. It's actually liquidity risk when we're talking about the stock market. Then you realize that you've made 300% profit. You try to sell and you fail. Why? Because the volumes are thin. So the more volume is traded, the better for you as a private investor. But then it also has a drawback, because the fact that there is much volume being traded on this particular company means you really can't control the price. Because one comes and beats. We have that particular challenge on Econet Zimbabwe. It has beyond 1 billion shares. So you might do the analysis, the math, and everything. You buy in. Then, because everyone is coming on ZSE Direct and C-Trade and whatnot, they can be even buying 20% up or selling 20% down. So for a company with so much volume, the price moves a bit slow. It's not as fast as the companies which trade low volumes. So you find that blue chip companies are the ones which usually push volume. In Zimbabwe, we're looking at your Delta, your Econet, your Insco, your Padenga. Those guys really push so much volume. But then, if you look at Hippo pushes quite some little volume as compared to the blue chips. So you might take longer to actually buy it, or might take longer to actually sell it, though you might capture a big profit on Hippo as compared to these other blue chip companies. So yes, volume plays a key role. Then volume also helps us to determine if the market has really moved or it's a dummy. Okay, this is what happens. If Econet is trading at $14, then someone comes through the market and sells their shares at $10, which means it's down by $4. Look at the volume. If the volume is 20 shares, literally the company hasn't fallen. So if the volume is down and you jump in and you sell, panicking, saying, hey, no, the counter has fallen, yet it's only 20 shares in terms of volume. That very same person who sold the 20 shares will then come and bid 1 million shares at 10. Why? Because they're creating a panic. So you need to check. When the counter increases, has it really increased? You check the volume of the trades. If the volume is $2,000 worth, then it's a dummy. Do not bite a dummy. So that's where pigs come in. They think, oh, it's gone up, let's sell. Then at the moment of no, it's going up, let's buy. At the moment of buying, then the price drops. And they panic, then they sell as it's down. So you make a loss double at buying and at selling. So you need to check the volume. The volume is a good indicator which tells you whether the share really went up or really went down.
When you read books about stock market investments, especially if you look at the United States, even in India, the advice that is given is that short-termism on the market doesn't pay. the market pays long term. But on the Zimbabwean context, what advice would you give to potential investors?
Okay, so the former president, Robert Mugabe, once made a very, very huge statement when he said, Blair, keep your England and let me keep my Zimbabwe. Zimbabwe and England are different. New York Stock Exchange and Zimbabwe Stock Exchange are completely different. They operate in completely different spheres of this world. So you cannot take the American books and their publishers and follow it as advice on the ZSE. You might cry. So ZSE, it doesn't matter. In terms of return, once you hit your target, salam alaikum, leave the market and go home smiling, cash out. Whether it's short term, it's medium term, or it's long term, cash out. But then if you're looking at long term, in Zimbabwe, you know we've got trends which change. We are not solid in terms of policy. Tomorrow we are using the Zim dollar. Tomorrow we are in the US dollars. Tomorrow it's now illegal to do this. Tomorrow it's now legal to do it. So even companies are planning medium to short term. So how do you then come and invest long term in companies which are planning medium to short term? So you cannot take the American recipe and apply it onto Zimbabwe and win. That will not work. Because even if you look at the way we bank, once you get your salaries to those who are going to work in Zim dollars, immediately people are withdrawing that money and consuming. Why? Because it's different from America. When you get your salary, you then invest it in unit trust and whatnot. It's completely different. That is the US and this is Africa. That is first world, this is third world. It's completely different. So not everything they say in books works. And I think the fault is people like us who have that particular knowledge, who haven't started penning down books. We actually need to pen a Zimbabwean type of way so that you guys can have material to read.
It says, would you advise somebody to just go by the recommendations that are given by stockbrokers? Instead of doing the research yourself, you just follow what they say. They tell you that Delta is a buy, then you follow that. Would you advise anyone to go by that?
Well, our stockbrokers are very professional. They came out of universities which we all attended. I've got a lot of friends in the stockbroking industry, in the advisory sectors, fund managers, a whole lot of friends. And their advice is good. But my view is that why do you always want to be spoon-fed? Why do people want to be spoon-fed? The stockbrokers sit down, they calculate, then they tell you, you can do the same. We're not challenging the stockbrokers, but we're saying you can complement. Instead of just getting there and asking which share is going, why don't you get there and you're having a discussion? They're speaking of the income statement and the balance sheet, you speaking of the cash flow and the future business prospects. You know, you reach somewhere, you get it. So let's avoid this idea of expecting the stockbrokers to actually spoon feed you. If you look at the mandate of stockbrokers, their job is to buy and sell securities on your behalf, not to go deep into giving you advice. That's why even if they advise you to buy a company and you make losses, you can't sue them because, well, it's not part of their mandate. And to conclude that question, I'll tell you something. There are two ways to fly. It's either you're a passenger or a pilot. Which one do you choose to be? At the time of mayhem and chaos, it's better to be the pilot. You just grab your parachute, you jump out, and you're out. But then if you're the passenger, you'll die there, back in the itinerary. You'll be actually requesting for peanuts. Hey, can I have some peanuts? And you're dying. So it's better to actually fly instead of being a passenger on the plane. It says, no, it's only for accountants, bankers, and no. Anyone and everyone can actually do it. You know what? If you look at the informal traders, those guys are supposed to be brilliant on the stock exchange because if I take 10 of those one from each province and I train them and they come on that market, you will see fireworks. So people need to challenge themselves. People need to learn new ideas. And, especially when it comes to money, you need to control your money. You should not delegate the most important part of your life, which is liquidity, to someone else. You need to control the money. Thank you.
How did it take you to master your trading skills time-wise? And then he says, did it take 1 year or more? what would you say was the biggest thing that has made you successful?
I started the stock market doing paper trading in 1998 when I was in grade 6. And I've been on the market in the hyperinflationary era. I've been on the market pre-GNU. I've been on the market during the signing of the GNU. I've been on the market in the GNU. I've been on the market post-GNU. I've been on the market pre-military action. I've been on the market post-military action, pre-COVID, in COVID, and obviously post-COVID, if God gives me another day to be alive. So it's been a journey of 22 years. You can never. People only see the fruits. You remember Kudzai when you were joking and saying, we need to investigate this guy. People only see the fruits. They don't see the roots which are there, the process, the work, and the input which we put to then make these ridiculous forms of returns. So it takes time. It takes time to master the market. It takes time to understand the market, to appreciate it, and not to, not to panic and not to make the wrong decisions. It takes time. But people are different. We never had any mentors which went beyond our knowledge now. So, it's been a journey where we actually create the trail instead of following a path. So, but then for you guys, at least you've got somebody you can Zoom with who's telling you, hey, there are pigs out there, so you need to watch the cycle of the market. We never had that. We were experiencing this firsthand. I think most people have asked me, which books do you read? I think the question is supposed to be, what books are you writing? Because there are no books to read. We are actually writing the books regarding investment.
What is your feeling towards exchange-traded funds? And then also Lee saying, what do you think about the Victoria Falls Stock Exchange? So the first one is exchange-traded funds, and then the next one is Victoria Falls Stock Exchange.
Okay, I'll start off with the Victoria Falls Stock Exchange. Well, it's a very good idea to have the Victoria Falls Stock Exchange. It's a very noble idea to attract the foreign investor. There is absolutely no problem about that. The idea is good, but then this idea is like a flower. So the flower needs to be attractive to the bees so that the bees can come and take the pollen from the flower. So our major challenge with the Victoria Falls Stock Exchange, regardless of it being a good platform which may harvest the much needed foreign currency, is the way we do things as a nation. So who will settle those transactions? That is the main question for foreign investors. That is also the main question for domestic investors who are banking with NMB, the National Mattress Bank, because all of you are putting your US dollars under the mattress. So the main question is, okay, who will settle these transactions? There is fear that if I put my US dollars there, then tomorrow it will be bond. So there is a lot of uncertainty. Who is going to settle those particular transactions? This is the feedback I got from the foreign investors I've interacted with regarding the Victoria Falls Stock Exchange. I'm not speaking on behalf of any institution. I'm speaking on behalf of myself. So who will settle those particular transactions? So they were saying, yeah, okay, fine. If it was HSBC, we would have poured in money. If it was probably Dubai Islamic Bank, we would have poured in money. But now there is always that deficit of trust between. Okay, with the ETFs, I spend most of my time just analyzing the shares, buying the shares directly. The ETFs, I'm still learning on that one. So I'm not really a fan at the moment. I'm still learning on that one.
Okay. Thank you for you might want to give us your parting shots.
Okay, so guys, the stock market is not a place where you borrow money from a bank and you come with it. You make me richer, and I'll gladly accept it. Thank you very much. So the stock market is a place where you bring surplus. Surplus is your when you remove your expenses from your income, you remain with your surplus or your deficit. That surplus is what you have to come with on the stock market, number one. Number two, we don't want monies with commitments. You are supposed to pay rent at the end of the month, then you take that rental and you come with it onto the market. You highly likely you only lead to courage buying another house. So do not bring money with commitments. Okay. Number three, do not invest in any counter or any business activity you don't understand and you don't have control over. You need to have control. You need to understand. You work hard to get that money. Work hard to protect that money. A fool and his money are soon parted. So you need to keep your money very close to you and very close to your chest. Because if you don't, it will fly off your hands. You need to learn the market. You need to be confident. You need to read. You need to interact with people who are already there. If you show me five of your friends, I will tell you who you are. Because birds of the same feathers flock together. So who do you play around with? I always like to kick the guys in the butt and say, you know what, guys tell me it's very difficult to invest, it's very difficult to start a business because of strategies and everything. But you know, if there's a hot girl in the neighborhood who is so fly, I know it was meeting Newakomana, and one of those guys will get that girl. She will definitely fall in love. So why can't we do that with the market? Why can't we do that with business? All we think of is beer. We go after the women, and we party. Why don't we transfer that energy into ideas which then generate money? I'm an investor. I'm an entrepreneur. I'm an investorpreneur. So why don't we have more investorpreneurs in the country? We're crying of unemployment. The same zesa which cuts on you is the same zesa which cuts on me. But I do something about it. I put up a solar system, which costs more than 2 cars. You get it? Why? Because we invest. So you need to learn how to invest. It's very critical. You need money in your life. Most of you guys are not even ugly. It's lack of money. You need money. I'm telling you, you need money. So let's work, let's invest, let's interact, let's socialize, and let's make the money. Let's make it happen. We can actually improve the country through making a lot of money on the stock market. Because most of this money is repatriated back to foreigners because they play on our market when we're out there busy fighting for better wages. So we need to push and invest on the market. Thank you.
Come through. They want you to be our Zimbabwean own Elon Musk. As they please, buy cheap, please. Just 3 hot buys. I've been trying to avoid this one because so they are saying, what companies can you look at currently which fits the best? You are saying strong fundamentals, undervalued. What you as 3 hot buys, please.
3 hot buys. Okay, I liked what you said. So I'll just, like I told you, I come from a military family and a law family. So I'll use the law part now to defend myself. I'll give you 3 hot buys on the Johannesburg Stock Exchange. Well, because I can't be arrested if they fall, because the ZRP does not have jurisdiction for arresting me for Joburg picks. So number 1, we're going for Nampek in Joburg. Number 2, we're going for PPC in Joburg. And number 3, we're going for Redefine in Joburg. Done.